Hi students, today we are going through some problems related to solvency ratios. We have already gone through the ratios analysis in solvency ratios. We have done so many problems. It is again revisited because we must be very familiar with these items. So there are different solvency ratios. The important ratios are debt equity ratio. Then debt equity ratio is calculated using the equation borrowed fund, that means debt capital, divided by shareholders fund. Shareholders fund, we know it is the shareholders fund, not equity shareholders fund. So shareholders fund includes equity share capital, preference share capital, plus reserves and surplus. Reserve is to be added, surplus, profit or loss account is to be added. If there is loss, it is to be deducted. This is how we will calculate shareholders fund. And the second equation is proprietary ratio. Proprietary ratio is equal to shareholders fund, the same amount, equity plus preference plus reserves and surplus. Shareholders fund divided by total assets of the company. Solvency ratio is calculated using the equation borrowed funds. Borrowed funds means debenture, bond, long-term loans, etc. Okay, borrowed fund, that is borrowed capital divided by total assets. And capital gearing ratio, this is another item. Capital gearing ratio is equal to fixed income securities. What are the fixed income securities? There are different securities for which we have to pay fixed amount, just like debenture, we have to pay interest, bond, we have to pay interest, long-term loan, we have to pay interest, and preference share. Preference share is also a fixed income security because preference shareholders are paid fixed dividend. Okay, so these securities are to be added, fixed income securities divided by equity shareholders fund. This is not shareholders fund, equity shareholders fund. Equity shareholders fund includes equity share capital plus reserves and surplus. Okay, let us go through some examples. Details of X Limited are given below. Equity share capital 10 lakhs, preference share capital 2 lakhs, 10% debenture 6 lakhs, long term loan 3 lakhs, reserves and surplus 1 lakh, fixed assets 16 lakhs, current assets 6 lakhs. Calculate debt equity ratio, proprietary ratio, solvency ratio, and capital gearing ratios. Okay, first is debt equity ratio. Debt equity ratio is borrowed fund divided by shareholders fund. Okay, ഇവിടെ ഈ ക്വസ്റ്റ്യനിൽ ഏതൊക്കെയാണ് borrowed ഫണ്ടുകൾ വരിക? Borrowed fund includes equity share capital is shareholders fund, preference share capital is a part of shareholders fund, debentures is a part of borrowed fund. So 10% debentures amount 6 lakhs, long term loan 3 lakhs, this is also borrowed fund. Then reserves and surplus is a part of shareholders fund. Okay, so these two items are there, debentures and loans. 6 lakhs plus 3 lakhs, 9 lakhs is borrowed fund divided by shareholders fund includes equity share capital 10 plus preference share capital 2 12, then reserves and surplus 1 13. Okay, 13 lakhs. So 9 lakhs divided by 13 lakhs, 0.69 is to 1 is debt equity ratio. Then next, proprietary ratio. Proprietary ratio is equal to shareholders fund divided by total assets. Shareholders fund, here we have already calculated 13 lakhs. Okay, divided by total assets. Total assets, here there are two assets given in the question. Fixed asset is 16 lakhs, current assets 6 lakhs. So 16 plus 6 20 lakhs, 22 lakhs. Okay, so proprietary ratio is equal to 13 lakhs divided by 22 lakhs is equal to 0.59. So the ratio is 0.59 is to 1. Next is solvency ratio. Solvency ratio is equal to borrowed fund divided by total assets. Here borrowed fund we have already calculated as 9 lakhs. So 9 lakhs divided by 22 lakhs. So is equal to 0.41. 0.41 is to 1 is solvency ratio. When we add proprietary ratio and solvency ratio, we will get 1. That is 0.59 plus 0.41 is 1. That is 100%. Then another ratio is capital gearing ratio. fixed income securities divided by equity shareholders fund. Here what are the fixed income securities? Preference share capital is a fixed income security, 2 lakhs. Debentures is 6 lakhs. It is fixed income bearing securities, so 8 lakhs. Then long term loan 3 lakhs. It is bearing fixed income. So it is total 11 lakhs. Then divided by equity shareholders fund. Equity shareholders fund includes equity share capital 10 lakhs. Then reserves and surplus 1 lakh. So 11 lakhs. The ratio is 11 lakhs divided by 11 lakhs, that is 1. The ratio is 1:1. Okay, this is another question. Details of X Limited are given below. Equity share capital, preference share capital, debentures, long-term loans, reserves and surplus, fixed assets, current assets. The same question, calculate debt equity ratio, proprietary ratio, solvency ratio, capital gearing ratio. Okay, first, so it is very compulsory that you write down all the equations in a single page and learn all the equations by heart, because it is very essential to solve the bigger problems and also solve the problems just like this. Okay, we can find the debt equity ratio, proprietary ratio, solvency ratio and capital gearing ratio very easily if we are well familiar with the equations. Okay, so you calculate these ratios and post the answer to my WhatsApp number. Okay, thank you. Today we are revisiting some of the problems related to turnover ratios. Turnover ratios are also called activity ratios. Okay, then the first question. Credit sales is 10 lakhs. Gross profit is 20%. Average stock amount 1 lakh. Calculate stock turnover ratio. This is a direct simple question because stock turnover ratio is equal to cost of goods sold divided by average inventory or average stock. Cost of goods sold is, here sales is given, gross profit is given. Okay, sales 10 lakhs minus gross profit 20%. 20% of 10 lakh is 2 lakhs. Okay, so 10 lakhs minus 2 lakhs is equal to 8 lakhs. So cost of goods sold is 8 lakhs divided by average stock is 1 lakh. So 8 lakhs divided by 1 lakh. The answer is 8. So stock turnover ratio is 8 times. It is expressed in times. Okay, so turnover ratio is 8 times. Is it clear? Then the second question. Sales 40 lakhs. Gross profit 20%. Stock turnover ratio is given. It is 8. Calculate the value of stock. How to find the value of stock? It is using the equation stock turnover ratio. Stock turnover ratio is given here, so stock turnover ratio is equal to cost of goods sold divided by average stock. And we have to find average stock. Average stock is equal to, how to write the equation? Cost of goods sold divided by stock turnover ratio. Average stock is equal to cost of goods sold divided by stock turnover ratio. That is 32 lakhs is cost of goods sold because sales 40 lakhs. Gross profit is 20%. That is 8 lakhs. 40 minus 8, 32. So average stock is equal to 32 lakhs divided by stock turnover ratio 8. 32 divided by 8 is equal to 4. Okay, the answer is average stock is 4 lakhs. So stock is taken as 4 lakhs. Next question. Sales amount 2.5 lakhs. Gross profit 0.5 lakhs. That is 50,000. Stock turnover ratio is 4. Okay, closing stock is 10,000 more than opening stock. 10,000 opening stock inekal 10,000 കൂടുതലാണ്. Find the value of opening stock. ക്ലോസിംഗ് സ്റ്റോക്ക് കൂടുതലാണെന്ന് പറഞ്ഞിട്ട് നമ്മളോട് ക്ലോസിംഗ് സ്റ്റോക്ക് അല്ല ചോദിച്ചത്, പകരം ഓപ്പണിംഗ് സ്റ്റോക്കാണ്. ഓക്കെ, സോ ഫസ്റ്റ് ഹിയർ യൂസ് ദ ഇക്വേഷൻ ഫോർ സ്റ്റോക്ക് ടേൺ ഓവർ റേഷ്യോ ഫോർ ഫൈൻഡിങ് ആവറേജ് സ്റ്റോക്ക്. Okay, cost of goods sold, stock turnover ratio is equal to cost of goods sold divided by average stock. Cost of goods sold here is sales 2.5 lakhs minus gross profit 0.5 lakhs. The answer is 2 lakhs. Okay, cost of goods sold 2 lakhs divided by stock turnover ratio is 4. So average stock is equal to 2 lakhs divided by 4 is equal to 50,000. Next, opening stock. Opening stock is equal to average stock minus difference by 2. അല്ലേ, ഇവിടെ ക്ലോസ് സ്റ്റോക്ക് പറഞ്ഞ് ക്ലോസിങ് സ്റ്റോക്ക് കാൽക്കുലേറ്റ് ചെയ്യുകയാണെങ്കിൽ പ്ലസ് ആണ് ഉപയോഗിക്കുക, ബിക്കോസ് മോർ ദാൻ ആണ്. ക്ലോസിങ് സ്റ്റോക്ക് മോർ ദാൻ ആണെങ്കിൽ ഓപ്പണിംഗ് സ്റ്റോക്ക് ലെസ് ദാൻ ആണ്. ലെസ് ദാൻ ആകുമ്പോൾ നമ്മൾ ലെസ് ചെയ്യും. ഓക്കെ, സോ ഇറ്റ് ഈസ് 50,000 മൈനസ് ഡിഫറൻസ് ഡിവൈഡ് ബൈ 2, ദാറ്റ് ഈസ് 10,000 ഡിവൈഡ് ബൈ 2, 5,000. Okay, so 50 minus 5, 45,000 is the value of opening stock. Another question, this is related to debtors turnover ratio. It is given as 6. Credit annual credit sales is 1,80,000, and it is said that closing debtors is 4,000 more than opening debtors. Find the value of closing debtors. First, use the equation debtors turnover ratio is equal to net credit annual sales divided by average debtors. Then average debtors is equal to net credit annual sales divided by debtors turnover ratio. So average debtors is equal to net credit sales is given as 1,80,000 divided by debtors turnover ratio is 6. 1,80,000 divided by 6 is equal to 30,000. Average stock is 30,000. Sorry, average debtors is 30,000. Secondly, closing debtors is equal to average debtors plus, because closing debtors is more, okay, plus difference divided by 2, that is 30,000 plus 4,000 divided by 2. 4,000 divided by 2 is 2,000. Okay, so 30,000 plus 2,000 is equal to 32,000. That is the value of closing debtors. This is another question. Debtors turnover ratio is 4. 4 means 4 times. Annual sales is 80,000. Cash sales is given as 30,000. Closing debtors is 60,000 more than opening debtors. Find the value of closing debtors. Closing debtors കൂടുതലാണെന്ന് പറയുന്നത്. Closing debtorsൻ്റെ വാല്യൂ കാൽക്കുലേറ്റ് ചെയ്യുക. So firstly we will use the equation debtors turnover ratio. Based on that we will find average debtors. Then the equation closing debtors is equal to average debtors plus 6,000 divided by 2, difference divided by 2. You solve the equation and post the answer to my WhatsApp number. Okay, thank you very much.